Well, the Federal Reserve announced its first interest rate cut in years yesterday. The cut slashes rates by half a percentage point, and it brings rates down from the previous 23-year high. CBS News contributor Javier David joins me now with more. Javier, we were talking about this yesterday. We were both leaning towards a quarter percentage point, and then lo and behold, we get this half a percentage point. What kind of relief can consumers expect to see immediately? And then where could they see some long-term relief?
Yeah. And surprise, surprise, the Fed decided to go big, and it decided that even though, by its own admission, the economy is performing at a relatively strong pace, or moving at a relatively strong pace, they need to do this, and they intend to do this even more or deepen the cuts by the end of the year. So it's a good surprise, but the market sort of did what it normally does, which is sort of bought on the rumor and then sold on the fact. And I think the biggest surprise was that they intend to cut even further over the later in the year. So for consumers, the effects won't be immediate. You're not going to see lower APRs or lower credit card rates. Credit card rates, in fact, are like north of 20%. But I think the most dramatic or immediate impact will be in the mortgage rate, which will tends to move very frequently. Each week you'll see increasingly lower rates. By the time we get to the end of the year, I think those of people that are looking for relief primarily in your credit card APR and auto loans, which are probably arguably the most problematic at this point, you'll probably start to see a little bit of movement downward there, thankfully.
So wait, Javier, did you squeeze in that there's an expectation that rates will continue to go down?
Yes, well, that I think was the biggest thing that upset the market yesterday. Not necessarily the 50-point move, but the fact that the Fed intends to move even more aggressively, another 50 basis points based on the dot plot at the end of the year, and could even continue to extend its rate cut campaign well into 2025 and perhaps even 2026. So there's a lot of questions being raised this morning about just how significant this move is,
Yeah.
how much we can expect to see in terms of economic weakness, because that's been a sort of ambient fear in the markets. That are we, doing as well as we think we are? And judging by the data that we've gotten, and certainly the retail sales we got earlier this week, we're performing quite well. But at the same time, there's this fear if the Fed it tends to cut deeper, are there storm clouds on the horizon?
All right, Javier. Thank you very much.
Sure thing.